I think every banker in the Central Jersey region is in the room, and we're pleased to see you and thrilled to have you. So I'm going to introduce Don Musso in a second, who founded FinPro Inc. in 1987, and it's become nationally known as a thought leader in community banking. 2012, Don formed FinPro Capital Advisors Inc. as a wholly owned subsidiary of FinPro to conduct capital market and investment banking activities. Don has a diverse background and skill set. In addition to 27 years of experience at FinPro and FCA, Don has started numerous de novos, several as a founder. And having worked for a couple of de novos, we appreciate your work. He's a member of various bank boards, teaches for elite banking programs. I've been through many of his webinars. And he's also frequently discusses community bank policy with all of the banking agencies in good old Washington, D.C. Don, it's all yours.
Thank you very much. Good to be here. Much rather be here than with my D.C. friends. I usually go there when I want indigestion. Actually, when I started in this business, before I started going down to D.C. on a regular basis, I had a full head of hair. That's what it'll do to you. I always start my presentations with a little bit of a disclaimer. Before the day is out, I will offend everybody in this room, or I haven't done my job. I tell people routinely, I don't like Republicans, I don't like Democrats, I don't like independents. I'm from New Jersey, I pretty much don't like anybody, okay? All right, I do like the chamber though, I'm glad to be here. Thank you very much for the invitation. Good. I'm surprised all the banks showed up. They hear enough of me. I'm surprised they actually want to come in here more. All right, I got a lot to talk about, I promise I'll keep it as succinct as I possibly can. We had a big webinar yesterday. We had about 500 banks nationwide on the call. The call really was to a response to, it was the third one that we've had in the last month, in response to the bank failures that happened both in California and in New York. So I'll spend a little bit of time on that. But before I do that, I want to tell you what I told everybody yesterday about the national economy. I'm bearish. I think we're going into a downturn. I just don't know whether we're going to do it at the end of the summer or at the end of the year. But every single indicator right now is negative. I don't know that in my 40-some-odd year career I've ever seen it this bad. However, New Jersey is going to sustain much less hit than the rest of the country, okay? And even though I don't like a lot of politicians, I'm going to give Murphy credit. He's done a lot of good things to position the state of New Jersey, okay? Most people would tell you I rarely say anything nice about anybody. So if Murphy were here, he would say thank you. Here's what's going on. Not only do we have a problem where there's just too much money in the system, okay? And that's been propping this economy up. But even worse right now, we have this technology surge that is going to take jobs out all over the country. I want you to think about it this way. You drive down the New Jersey Turnpike, the Garden State Parkway. Do you see any toll takers? Easy pass. All those jobs are gone, not just in New Jersey, now across the United States and in Europe, okay? If that's not bad enough, I want you to think about, going to the airport. I'm at the airport. I usually fly 2 or 3 days a week. So I'm at Newark Airport last week. I'm sitting in the United Lounge, and all of a sudden this robot appears in front of me. Has anybody seen that blessed thing? Frickin' little robot. I'm trying to enjoy my drink and my meal, and it's like waiting for me to finish so that it can take my plate and my glass away, right? The good news was it didn't expect a tip. Entry-level jobs, as we historically have known them, won't be here 3 years from now. I tell my banking clients all the time, you're going to have to redo the branch structure. We're not going to have tellers. We don't need them. By show of hands, how many of you go into a bank branch anymore? Telling. Nobody. My 90-year-old mother, okay? Pre-COVID, she used to go to the bank once a week. It was her social outlet, okay? All of a sudden, under COVID, she figures, wow, I can order my groceries online. I can, through Facebook and other things, I can talk to my grandkids and my great-grandkids. Oh, And guess what? I can do all my banking. I no longer have to leave the house, okay? Great news, except that now she calls me all the time, and my wife. Here's the problem. Everybody's heard about inflation. What did the inflation number come out yesterday to be? 5%. Everybody in the administration's running around, patting themselves on the back, breaking their arms, right? And I'm looking at them like, you're all idiots. Inflation is not the problem. Let me tell you what inflation does. It measures prices today versus either prices a month ago or prices 1 year ago. What that tells me is prices today are 5% higher than they were 1 year ago. That's not progress, okay? Let me give you some statistics. Anybody know what a dozen eggs cost today? No, not quite that bad. $4.21 a dozen. Pre-COVID, $1.74. How many of you think the price of eggs are going to deflate back down under $2? Better example, wages. We've passed minimum wage laws all over the country. How many of you think people are willingly going to say, I don't really need to make $20 an hour. I'm perfectly willing to make 12. These costs are now being baked in. Gas, it was $2.80 a gallon pre-COVID. It's now $3.62. Well, great, they brought it down from $4. It still went from $2.80 to $3.62. I don't see that as progress. I think the problem is that we have really high prices. And what that means is the lower end consumers aren't going to be able to make ends meet. And that's when problems start. So we've got to figure this out, but we've got to figure this out pretty quick. We actually need deflation, and we're not going to get it. We're nowhere near the 2% threshold that the Fed sets, and I don't see us getting there anytime soon. Okay, we got layoffs being announced daily, particularly in the tech sector. Here's what's going on. $300,000 Meta employee or Facebook employee gets let go. It doesn't show in the unemployment numbers because they get hired a week later, but they're making $150,000. Still a good wage, right? But half of what they were making at the tech institutions they were at. That's going to fuel issues in the labor market. So nationally, we have headwinds. New Jersey, we're going to outperform. Why? Think about New Jersey. What a great place to live. We got mountains. We got the Jersey Shore. We have horse country. We have New York City and don't have to pay for it, right? We get Philadelphia. We got more sports teams than most people have within like a 500-mile radius in every single pro sport known to mankind. We now have a Big Ten university in Rutgers. I'm the second largest booster there, so I feel pretty good about what we're doing. We got a lot of work to do. We have the top, I think, Ivy League school, Princeton, right? All of this contained in New Jersey. We also have the third best educated workforce in the country. That we can build on. And that's why New Jersey is going to sustain better. We're not going to be hit as hard as the rest of the country, okay? And hopefully we'll be able to continue to attract people into the state. But New Jersey has its own set of issues, namely red state, blue state, okay? And the real problem, taxes. New Jersey's taxes are just way too high. Because of taxes, we are the 47th out of 50 states in terms of being business friendly. 47 out of 50. Let that sink in a minute. That means there's only 3 worse than us. What are we doing? I know we could be number 50. Come on. Number 43 in cost of doing business. That's why new businesses aren't forming here at the rate that we need them to. And that's what hopefully organizations like this can change. We've got to make this an attractive place. We've got to sell the positive attributes of New Jersey. We've got to sell our workforce. We need to bring business into New Jersey if New Jersey is going to thrive. I'm not sure our politicians are willing to address it. Both parties. 0 fiscal discipline. Okay? We have a 9.76% tax burden. Let me put that into context. You make $500,000 in New Jersey, you pay almost $50,000 in state taxes. Pick up and move to Florida. What's your state tax? 0. You know what that means in real hard-earned tax cash dollars? $50,000. It pays for your move and it pays for your new house. That's why people are leaving in droves. The high end. Now, luckily, we're not the worst state. New York and California are whopping us. They're just killing us and losing people. Okay? I mean, you really got to work to be that bad. But I don't want to be the next New York and I don't want to be the next California. So change has got to happen. And that means we've got to start blasting our politicians, all of them, both parties, okay? And that's not going to be easy for us to do. I think it starts with banks. I think banks, without banks, we're not going to have funding for loans. We're not going to have a place for deposits. We're not going to have something to fuel growth. So I'm going to talk about that in a minute. One last problem for New Jersey. Out of 50 states, what number do you think we are in unfunded pension liability? Not 50, 49. Serious, serious problem, right? How big is the problem? It's estimated to be a $96 billion shortfall. You know what the New Jersey annual budget is? $50 billion. It's twice our annual budget. Now, how many people think they're going to be able to fix that problem quickly? Unless they tax the living daylights out of us, and we're already at 976. This is a problem that's not going to go away. Unless, and I'm going to say it, we get rid of pensions. Give all state workers 401ks, like the rest of us in this room. How many people in the room have a pension? People, that's okay. Pensions are a good thing. I'm mad that, my boss, me, didn't give me a pension. Seriously problem. But New Jersey can't afford it right now. We can't make up the $90 billion, let alone the liabilities are going to accrue over the next 3 to 5 years. So we're going to have to do the unpopular, I think. I don't want to take pensions away. I want to freeze them. Whatever everybody has earned in their pension, they deserve. They earned it. But come on, let's be honest. How many of you are really ticked off every time you pick up a newspaper and you read about somebody double dipping in a pension? Right? Psst, I should be so lucky. I have threatened to quit my job and go to work for the state of New Jersey just to get a pension. Okay? That New Jersey, I would do it, but New Jersey wouldn't have me. All right, here's the problem. Because of New Jersey being so densely populated and having such a dense business, it was a great place to form banks. Just 10 years ago, we had 110 banks in New Jersey. How many do you think we have today? 54. 50% decline. 50%. You know where it's going to be 3 years from now, estimated? 22. Okay? That's a problem because we need community banks who know small businesses in every market. That's the lifeline. That's the fuel that will promote the engine. Without it, we're going to have problems. We don't have any new banks. I'm starting about a dozen new banks across the country for people as we speak. We are the leading firm for de novos. You know how many we have going in New Jersey? 0. There is one that's talking about starting up in Paramus. 1. New Jersey should have 4 or 5 going right now. With that kind of consolidation, with the markets that we have, the population density, the business density, we should be seeing a lot of bank growth. We're not seeing it. So I think that's going to be an issue. Now, let's talk about what happened within the last month. It started with a little bank in the East Coast, in the West Coast, that is called Silvergate. And Silvergate was a crypto banker, amongst other lines of business. The regulators, in their infinite wisdom, came out over the last 6 months and basically told banks across the country, you cannot be in the crypto business. Silvergate's business starts to tank. They make the decision to liquidate, meaning they didn't fail. They literally sold all their assets to pay off all of their deposits and liabilities. Whatever's left went to their shareholders. Okay? That's what started it. Everybody thinks it was Silicon Valley. It was not. It was the liquidation of Silvergate. Roll forward. Everybody's looking at Silicon Valley Bank, SVB. On a Thursday after, they had $180 billion in deposits. On a Thursday afternoon, 42 in a 4-hour period of time, 42 billion out the door. That night, orders for 100 billion more came in to go out. 142 billion on 180. So, of course, Washington's upset, and of course the bank fails because they can't meet that liquidity demand. So Mr. No Filter here gets on the phone. I'm talking with some of the FDIC folks, and I said very clearly, let's just be honest. No bank in the country, by the way, no bank in the world can sustain that kind of a run. It's impossible. I said, I don't care what you ask me to do. I don't care how much analytics I run. Nobody in the country, nobody in the world can sustain that kind of a run. And here's the problem. How many people have seen It's a Wonderful Life? Remember that? Remember Jimmy Stewart? Yeah. Okay. I used to love Jimmy Stewart because he always wanted to travel and he never could. And his younger brother was like this great hero and all that. And he's just this little SNL guy, right? I kind of thought of myself that way. Those kind of runs where people would line up down the street aren't going to happen anymore. Now they happen digitally. And that's a huge problem. I can't even begin to tell you how big of a problem it is. Every rule to manage liquidity that we have is built around cash. Cash doesn't matter. It's all about what do we have in our master account at the Federal Reserve, because that's where the money is going to move in and out digitally, okay? So not only could none of us meet the run, but none of us have the systems, none of us have the analytics set up for the new kind of run that we're experiencing. We have now built it. I will tell you what I'm allowed to tell you. There is meetings going on in Washington to adopt new liquidity rules. I wrote most of them, so I know exactly what's going to happen, okay? Let's move to uninsured deposits. So the big problem was once we started to see a run at SVB, all of a sudden, everybody that had uninsured deposits, i.e. more than 250,000, said, ooh, if this bank goes under, my deposits are uninsured, I'm going to lose it. So, of course, everybody starts to pile on, right? That's why we went up to $42 billion. That's why we had another $100 billion of orders for Friday before they were seized. Huge problem. So when they failed, the FDIC, Federal Reserve, OCC, all got together and said, we've got to stop this from happening. We now face contagion. And they did two things. The first thing that they did, which is unpopular, but they did it, is they said, we are going to insure all the deposits at SVB and also at Signature Bank, which failed for crypto also in New York. Okay? Both had liquidity runs. The two banks that failed for liquidity. They're claiming it was interest rate risk. They're idiots. It was not interest rate risk. Okay? And I can prove that time and time again. It was liquidity runs. That's what caused the failure of these two banks. But the FDIC in particular looked at it and said, we're going to insure, we're going to take the unusual thing of we're going to guarantee all deposits, okay? The Federal Reserve then took another step, which I think has had even a more dramatic effect. And they set up what's called the Bank Term Funding Program, which is the ability for all of us banks to pledge collateral and borrow against that instantaneously. And we can pledge things at par, not at market value, okay? We can get access to cash in minutes, not hours or days. And we can prepay those borrowings whenever we want. It's the best funding vehicle known to mankind today. All of my clients across the country are loading up on it. Those two things stop contagion, okay? As we sit here today, we have probably at 100 banks nationwide that are a risk for uninsured deposits and like. We're not going to fix it. Why is that a problem? Okay. Under the Trump administration, they went in and they said, we're going to change the rules to say that to be systemically risky, i.e. for us to bail you out, you've got to be $250 billion or bigger. Okay, it was $50 billion. They moved it to $250 billion. That's why we got Liz Warren and all these other people out right now saying, it was all Trump's fault. You ever notice everything in the world is Trump's fault? I mean, look, he's not a nice guy, but he didn't cause all these problems, right? Now we've got the situation where they've now rescued SVB and Signature. Now it's an implicit guarantee for any bank 100 billion and up, not 250 anymore. Now they're systemically risky. You're going to hear this come out in the press in the next 2 weeks. I'm letting the cat out of the bag. The new systemic risk level is going to be 100 billion. That's great. If you're over 100 billion, it means all your deposits have an implicit federal guarantee. You know how many banks we have in New Jersey over 100 billion? How many? 0. Our biggest is Valley National. They're about 60. Everybody else is down 10 billion and less. We have a few that are between 10 and 20. What does that mean? Not one bank in New Jersey has the implicit guarantee. We are at a huge competitive disadvantage. It's got to end. There's got to be change. So you say, what is the change? Well, the problem is now I got Republicans over here, and let me see. I got Republicans over here, Democrats over here, left and right, who don't even speak to each other, let alone figure out how we're going to get anything done to solve the problem. But what I think is going to happen, hint, hint, we had a program in 2008 called TGLP. where we went out and the federal government guaranteed non-interest-bearing transaction accounts unlimited, and it cost the banks 10 basis points. That's what you're going to see. Why do I think that that's what you're going to see? This is what I think. Liz Warren will not approve raising the consumer limit. She thinks all wealthy people should just, crawl in a hole and die. If you have any money whatsoever, she doesn't like you. She doesn't like banks either. To her, banks is a 4-letter word, even though it's 5. The Republicans can't get out of their own way. They're infighting so much down in Washington, they're never going to get anything approved. But I think they can settle on every business might have more than $250,000. We need that money to make payroll, to keep people employed and all that. Therefore, and we have case precedent. We already did it in 2008 and 2009. That's what I think we're going to see, okay? I don't expect that announcement to happen in the next few weeks. I think they're going to let it play out. I think if they had their ultimate druthers, nothing would happen. Even though they're out talking, I don't think they really want anything to happen. So, New Jersey, we have a pretty serious competitive disadvantage. I don't see that it's going to get self-corrected overnight. We're losing branches, bank branches, for the reason I mentioned earlier. Nobody goes into them anymore. Nobody in this room goes into a branch. Well, nor does my 90-year-old mother. Nor do I. Okay, shoot, I consult industry. I haven't been in a bank branch in ages. We're down to 2,493 branches in New Jersey, off almost 1,000 branches in the last 10 years. I expect that number to be half in the next 3 years. We are recommending branch closures across the country, but we are also recommending them right now in New Jersey. That means certain communities are not going to have a physical location in their market. That's a problem. And I don't know how that problem is going to be dealt with, okay? But everybody's gone digital, and so every bank's growth plan calls for a rise in digital delivery. Not all banks can be successful at that. That's why we're going to see a number of banks give up the ghost and consolidate. And like I said, consolidation is going to be pretty dramatic. I'm also worried about banking being one of the leading industries in New Jersey in terms of hiring, in terms of the labor force. We're down we lost 2,085 jobs in the last 4 years. It started a year before COVID. 2,000 jobs, that's a lot. It's about 6% of the workforce that's in banking in New Jersey. I think that's going to get worse. It's going to get worse because we're going to have less branches, don't need people. We're going to have more automation of credit. We're going to have more automation of a digital delivery, all that. We're not going to have checks that we have to process and all that stuff anymore. All that's going to cost jobs. What we're going to wind up with is having a lot less jobs, but they're going to be much higher paid, and they're going to be much better educated. And I think that's not just a banking problem. I think that's a industry-wide, USA-wide problem. That we're all going to have to get the best employees, highly educated, highly trained, and we can't afford to lose them. This coming at a time when what is Congress and everything doing? They're looking and saying, I have a really good idea. Let's eliminate employment agreements, making it harder for us to keep our best people. I would swear, but there are ladies present. It's the most you-know-what thing I've ever heard in my life. Let me give you an illustration of how it works. We had 9 people at FinPro in our technology department pre-COVID. We're now down to 3. We are outproducing. Our productivity is now double what it was in terms of systems output. Why? There's a little thing called Microsoft Library where you can get free code. My guys are going out and stealing free code all the time. It's not stealing. We're borrowing. There's no, this is not being taped, right? We are borrowing those snippets. They are free. You can go and borrow them. But also now, AI is also now, we can take a lot of our Excel models and we can have AI write it into a language called Python, and they can do in minutes what it used to take some of our guys days to do. It's unbelievable. So you're going to love this. Yesterday, I told everybody, all the bankers on the phone, I said, I have a special guest coming in to make an economic forecast as soon as I'm done talking to you. And what I did is I brought up Bing AI. And I asked Bing AI, I said, what's going to happen to rates? And it went through a detailed litany of exactly what it thinks is going to happen to rates. Stealing from the Federal Reserve, stealing from the OCC, stealing from the FDIC, stealing from people like me. It has created its own opinion on what rates are going to do, okay? I then asked it, to get a little humor going, what do you think Don Musso is going to predict? And it said, Don Musso is unpredictable, therefore we're not going to even attempt it. AI is smarter than we think it is, right? The good news in New Jersey, loans are up, deposits are up about 35% from pre-COVID levels, but they're flattening out, okay? We cannot experience a downturn. We, in the banking sector, we've got to lend. We have got to continue the economic engine. If we start to have a credit crunch because we in the banking sector won't lend to you all, it's going to magnify the problems in New Jersey. So we can't let that happen. While all this is going on, everybody in their infinite wisdom in Washington is running around saying, well, it's not like we had enough fun with Signature and Silicon Valley. Let's forecast the next problem, what's going to make banks fail. It's like they get this glee anytime they talk about banks failing. So they've now decided that commercial real estate is the next big problem. And their argument, it's a sound argument. Their argument is cap rates have gone up almost double. Therefore, real estate values should be off about 30% as new commercial real estate loans are written, and as old ones mature and have to be recast, they're going to have a hard time being able to do it without putting in more collateral or putting more down payment in. Additionally, space is being given up, particularly in the coast along the city and in the Cherry Hill area down by Philadelphia. We have huge leasing problems. I asked a couple banks that are in attendance today what they think is happening here in this particular region and broadly in central New Jersey. Not really that pronounced. That's good news, right? It's the urban areas that are going to really crater, but it's going to be a problem. The bad news for all of us is it means we've got to completely redo CRE analytics as we know it. We're in the process of rewriting that engine right now, okay? So things that my firm, that's what we do, things that we've been relying on for years, maybe even a decade in some cases, are all being rewritten as we speak. That's how big these changes are that you guys are reading about. And it's not really known, it's not showing. Let's turn to residential real estate for a minute. What do you think residential real estate prices have done since the onset of COVID? In New Jersey, 35% up, okay? Yeah, they've come down a little bit. Ooh, I care, I'm still up 28%. What caused it in New Jersey? Everybody left New York, everybody left Philadelphia, we're the recipient, okay? Additionally, there is no inventory. The inventory just doesn't exist. Because of that, if people want to move, they're going to have to pay up to get the little limited inventory that's available. Additionally, the rules in New Jersey for building are so archaic. I mean, and we've got to do so much work that it takes twice as long to build a house today as it used to, with 10 times the cost for new administrative rules. That's slowing the process down. So we're not getting enough inventory in quick enough. My feeling, residential real estate holds in New Jersey. Might it decline a little bit? Yep. But hey, we're in the spring season. This should be the hottest part of the market. We have no inventory. Likelihood of people waking up in July and saying, hey, I got a good idea. I'm gonna move, not high, okay? We have one other thing that nobody's acknowledging that's saving the real estate market. How many of you in the room have a mortgage on your current homes? Is the rate below 4%? Are you going to run out tomorrow and say, I got a great idea. I can get a 6% rate by refinancing over here? Not going to happen, right? We're going to take that to our deaths. So we're going to have these mortgages for 200 years probably. 30, well, they're all capped at 30, so I'll limit it to 30. I have more good news in New Jersey. Bank equity is at the highest level it's ever been. We have more equity, common stock equity, or just bank retained earnings than we've ever had, okay? And it's up 30%. It's up to $22 billion. That means we can afford $275 some odd billion in assets under management, meaning we've got about $40 billion worth of growth in New Jersey before we even worry about adding more retained earnings and the like. Our banks are rock solid. CEOs in them really have done a nice job. I applaud you. Likewise, asset quality in New Jersey is pristine. we're not having big delinquencies. We're not having a lot of non-accrual loans. So what's happened is our loan loss allowances, the money that we set aside to cover future losses, has exploded. We have a record amount in loan loss allowance. I can't say the same thing nationally. So let me just talk about nationally. First problem that we have is Washington is inept. I told you I'd offend everybody in the room. I don't mean to. I just can't help myself. By the way, and the bankers will tell you, even when I'm at banking conferences and they're sitting right across from me, I will tell them they're inept. Or they're idiots. They really appreciate that. But I get offended at how inept they are. So what are they doing? They're out making our lives worse right now, not better. Okay? Yes, we got to respond to Silicon Valley. We got to respond to Signature. But it's not going back to a cause that never happened. Let's address the cause. It was a digital run. How do we address a digital run? Nobody knows right now, including me. I don't have that answer. I'm working feverishly. I do not have an answer how I can overcome. I can get probably the common bank up to about a 60% run, and then we hit the wall. 60% used to be considered pretty much an impossible task. Not anymore. So I don't know what's going to happen on that. My guess is that the risk of a run will go down dramatically when we do the old TGLP insurance thing. But they're also out telling everybody, every bank in the country, if you touch crypto, we will crucify you. So how many banks are going to fund crypto? A little worse than that. Has anybody ever heard of a thing called Operation Choke Point? Under Obama, in their infinite wisdom, they decided we aren't going to allow you banks to fund certain businesses, namely Second Amendment. There were a few others that were in there. I can't remember the whole list. Under the current Biden administration, they're doing the same thing, Operation Choke Point 2. You know what businesses they're going after? Fossil fuels, right? So I got clients in the Dakotas, all kinds of ticked off because we got shale. Every one of my Southwest clients has got oil. We're getting killed there. My Pennsylvania clients are being killed because of gas. My West Virginia clients are being killed because of coal, okay? And I don't have anybody that's really doing well in solar or wind. Let me tell you how bad it is. I have this new house at the shore. It is windy all the frickin' time. I mean all the time. Mr. Green here says, I got a good idea. I'm going to put some new wind turbines up on top of my house. Super efficient. They do them all over Europe and Canada. I'm like, they're going to love me. You know what they told me? You can't do it because it's too high and it doesn't look attractive. I'm like, well, you told me you want me to be green. I have a river in front of my house in Bedminster. I wanted to put water, hydro, in the river. Well, you might kill a few fish. I said, yeah, but I can literally take care of the electricity for 4 or 5 houses. So we lose a couple fish. If they're stupid enough to go through the turbine, they deserve to get chewed up. I told you I would offend you all. I apologize. But we want to go green. We're being told we have to go green. We're being told fossil fuels are bad, and then they won't let us go green. So I don't know where that's going to go. Banks, though, are leading the charge. We're all now funding solar programs across the country. We're financing wind farms. What's the big problem with wind farms in New Jersey? Where'd they put them? Off the coast. Okay, now we have a couple of dead whales and some stuff like that. Boom, wind farms now are no good. And that might be true, right? But wouldn't you have thought somebody would have figured that out before we put the blessed windmills out in the middle of the ocean? I mean, it shouldn't have been that hard. So we're going to have, I was at a meeting in September. And the Federal Reserve, was a Federal Reserve meeting in Kansas City. All the Kansas City Fed folks were there, along with all the other districts. And they let the cat out of the bag. The Federal Reserve is running a program right now called 555. Okay, 555 means that we are going to raise rates to 5% to get unemployment up to 5% to bring inflation down below 5%. It's called 555. Where are we today? What's rates? 5%. Where's unemployment? Stuck at 3.6. Won't move. All right, not good. Where is inflation? 5%. 2 of the 3 metrics have been met. But the big debate is, are we going to be able to get, is unemployment going to be able to rise to a level where we believe that we're going to be able to drive inflation even further, okay? Remember, I told you it's not inflation, it's real prices. But that's what we're dealing with. Nationwide, we're going to continue, probably we're going to have one more rate rise of a quarter. Why do I say that? I went back and looked over the last 60 years. The Fed has never stopped when it should. Never starts when it should, never stops when it should. They always overdo it. So we might be in the first time where we make a May announcement the first week in May that rates are going to go up another quarter. They might turn around a month later and say, just kidding, we're taking it back. Okay? Never happened in history that quickly that we've had a rate rise followed within 30 days by a call. But I think we're going to see that. I think we're going to hinder ingenuity and innovation. Certainly in crypto, we're certainly going to see it in digital dollars and all that. The United States is way behind our brethren across the globe in having digital currency. Every other country, I do State Bank of India, I do Central Bank of Taiwan, I used to do National Bank of Ukraine, but I won't go there anymore. All of these countries have digital currencies. We're the only ones that don't. Here's the biggest problem that nobody wants to talk about. Right now, anywhere in the world that you go, if you conduct business, it's exchanged in what currency? Cash, the US dollar. That's changing. And China and Russia and India and a couple others are getting together to create a breadbasket approach, and it will include every currency but the dollar. They're not even going to include us in the bundle anymore. Okay? That's how bad the international situation has gotten. If we are not the international currency, the U.S. is going to have a huge, huge economic downturn. So pay attention to that. I'm going to skip this. Banks have to worry about green swans and black swans. Green swans are climate. Black swans are things like the Ukrainian war and the like. I no sooner buy the house at the shore than what happened. We get northeasters, we get flooding. We had tornadoes, 7 of them like a week ago. I mean, what the living heck, right? I live in New Jersey. We don't have any of that nonsense. We even had a freaking earthquake, okay? Now we got to worry about all that stuff. Well, I got clients in the Midwest that every day live with the threat of tornadoes and the like. They all have safe rooms. Anybody have a safe room? Wager a bet. Remember, right before Sandy, none of us had generators. What did Sandy do? It caused everybody to have generators. We've had 7 tornadoes. Give me 1 or 2 more, guarantee that half this room next year will tell you that we have safe rooms. Half the room will raise their hand, okay? I think that might fuel New Jersey. But it's tough. It depending on the industry you're in, I think we're going to be in for some pretty tough times. Let me just spend 10 seconds on demographics, and then I'll bring it to a close here. Boomers, we're getting old. And we're going to transfer all of our wealth to everybody else, okay? And I keep looking at my kids and say, you haven't earned it, okay? But that's what's going to happen, right? Something happens to me, and the kids all of a sudden have all the wealth, and they don't think or act like I do. They're not going to keep money in a bank. They're going to move it to wherever they want to move it, and they should. It's going to be their money at that point, right? But we're not ready for that in banking. We're still running banks like it was 1970, 1980. We have not made the transition from the boomer generation to millennials and Gen X and Gen Y yet. We've got to make that transition. We're not ready for it. I think that's going to be the biggest change you're going to see in 23 and 24. I think getting workers is going to be really hard, not just in New Jersey, I think nationwide. Because how many young people are going to wake up in the morning, you know, at a great university like Princeton? I have a good idea. I'm going to go into the banking industry. Nobody in this room, because I just told you we're going to consolidate to oblivion. So nobody here is going to go into this crazy business, right? But I mean, at the end of the day, we're going to have a hard time attracting people. And I worry about that. And that maybe that's solved by the consolidation. That might be the way we solve this problem. But I'm going to tell you, my biggest concern is where do we get talented people? I worry about it so much, I moved my offices from Gladstone to Somerville so that I could have young people get to and from the office by train. Okay? And it's already paid dividends. Through 2022, we hired 1 person. In 3 months, we've been able to get 2 because we're now considered to be in America again. We're not out in the middle of the hinterlands. Digital is going to continue to grow at a rate that we have never seen before, and that's going to change the way all of us do business. And again, this is not just banking. Amazon, what has Amazon done to all you guys, right? And we complain about it, and then what do we do? Oh, look what's I can buy on Amazon. We all do it, right? All right, I'm going on record with you. I'm putting my foot down. I will not have a driverless car. I'm from New Jersey, and I enjoy my road rage. But think about it. We're not even going to have drivers anymore, right? Everything's going to be with digitally prepared and the like. So I think it's going to be problematic. Let me leave you with this thought. I'm a little bit bearish, as you probably have heard, on the national scale. I think it's pretty bad. I think Washington is just a cesspool. I really do. Both parties. If I had my way, we'd put them all on a ship, poke holes in it, and send it to sea. I do think we have a potential for a soft landing, though, nationally. I really do. I think that we might be able to avoid having this thing be much deeper and much darker than we've experienced historically. I think New Jersey is going to outperform that. I think we're almost guaranteed a soft landing here in New Jersey. I think it can be even better than that if Murphy can convince the New Jersey State Legislature to get a little bit of fiscal discipline. You give this state a little bit of fiscal discipline, really good things are going to start to happen. Ultimately, though, the fate of New Jersey is all of you. If you hire, if you grow, if you invest capital, New Jersey's going to do great. If you retrench, if you pull back, we're going to have problems like the rest of the country. I have faith in you guys, okay? Go out and win the day. Thanks for having me. I appreciate it very much. Do you want me to take any questions? Sure. I'm told I can take a few questions. Ask at your own risk. Yes?
What's the role of non-bank lenders? Are there going to be fillers for those choke points?
So the question is, what's the role of non-bank lenders? I don't think it's going to be as severe as it is on the funding side. And the reason for that is I still think customers want the relationship with their lender. So community banking in particular, the one competitive advantage that we have is relationships. The bankers here know everybody in this room. They have a relationship with you. You're never going to get that digitally, okay? I know a lot of people who've tried to have a digital relationship, never worked out real well. That was a joke. I think they're probably going to gain some market share, but it's not going to be dramatic. I think the banks, community banks, are going to hold that space.
Private credit, like I'm talking cannabis, I'm talking things you're not allowed to
Yeah.
finance.
That'll entirely go into the non-bank sector out of necessity. There's no other way to finance it. One of the things that I'm going to be working on, I don't care if it gets to be public. I think New Jersey, there's only one state in the United States right now that has insurance outside of the FDIC, and it's Massachusetts. I'm going to try to convince the New Jersey legislature to provide New Jersey banks with our own insurance program. Okay, so it'll be above and beyond, just like the program in Massachusetts. I think we can role model it after Massachusetts. We just need to get, if anybody here has any political pull, come and see me. Coughlin and the Senate so far have been lukewarm to the idea, but we need to get it done. Any other questions?
If Washington doesn't listen to you about the program to insure deposits over 250 and doesn't institute that one that only costs 10 basis points, are we going to be looking at some pretty hefty assessments?
We're going to have, it's a two-part question. The first implied question is, what happens to New Jersey banks if we don't get more insurance on the uninsured? We're going to have a slow, steady drain of deposits, leaving us and going to Chase and Citi and Wells and the other big banks. Because why would I keep $1 million with a small community bank when I have the implicit guarantee at a large bank? It's going to be an issue. Now, there are ways around that with ICS and Cedars where we can insure pretty dramatically up to 5 and 10 and 10 million, but we're going to have to really get out and promote that. The second question is banks are going to probably get a 20 to 22 basis point assessment based on the loss. We're going to make up a $22 billion shortfall in the FDIC fund because of the bailout. There is very serious talk, though, about having it be almost 30 basis points for banks 100 billion and up, and then it would drop down to 10 to 12 basis points for all of us community banks. That's where my hope is. I hope that we bifurcate that for the first time. Other questions? Nope.
You say boomers keep their money in banks, and when millennials inherit it, they will not. Where will they keep it?
first of all, they're probably all going to buy their own homes. They're all going to be in the stock market. They're all in crypto. I mean, they're in a whole bunch of different things. I'm sure everyone will do their own unique thing. But, I can remember my dad was a product of the Great Depression in 1929. And so he thought radically different. He was like a tightwad, right? And it was always because he had to have a garden in his backyard. That was the only way that they were going to eat and stuff like that. That's foreign thinking to all of us. We've never been there before. Yeah, we've been through some downturns, but really nothing like that. But we're still a product of that generation. So the boomers, we're still fairly conservative in the way that we think about it. We leave a certain amount in banks. My kids, night and day. Here's the way banks, let me tell you how banks are going to think about it. I think this is a really good illustrative example. My mother-in-law and father-in-law are in late 80s and early 90s, and right now they are pensioners. Money comes into a bank, money goes out, okay? They're not borrowers, they're not accumulating wealth, they're not buying a ton of stuff. They're at kind of the end of it, and they're just in and out. My wife and I, we now are saving for retirement, even though I'm never going to retire. Because you'll read about it in the paper, she'll kill me the first night. She loves it when I go to work every day. You would too. But we're sitting here, my wife and I, we don't have any debt because we're saving for retirement. We are the best example for banks deposits. So we got trust, we got deposits, we got all kinds of great things. Now we go to my 4 daughters. They're all in their mid-30s, and I have 15 grandkids from them, okay? They have more debt than God. They would hock the dog if they could, okay? They got car loans, student loans, housing loans. I mean, you name it, they borrow. They don't have 2 nickels to rub together, but they're great for getting bank loans. Then we go to my son. Love him dearly, 30 years old, okay? His idea is get his paycheck, go to the bar, spend it, and eat in my house for the next 2 weeks. Okay? One family, 4 completely different segments. Each segment is going to react differently. The key to banking is how do we interface with each one of those segments today and what we expect to happen over the next year. My kids, now particularly the ones in debt, that's why I have a taster, by the way, because my kids would love nothing more than, I'm only kidding. But they know at the end of the day, their debt would get wiped out. If something happens to me, the debt would be wiped out. So there's no economic incentive for them. That's the real world. It's not about them being, being bad to mom and dad. It's just that if they have debt, okay, the debt will get expunged over time. Maybe sooner if Biden, wipes out student debt. So what I've been I told all my kids, go back to school, take out a lot of student debt because we're going to get it expunged. Just kidding. Any other questions that I can? Yes, ma'am.
How does the rental market, how is that affected with all of this, with interest rates? And I thought millennials weren't buying, they were renting.
They are renting, right?
Now the rental market
The renting market has gone up through the roof, as you know, and so it's getting harder and harder to find apartments. Now, in New Jersey, that's going to be solved by the fact that every single municipality has to build a ton of low and moderate income houses, and to get those built, they've got to build market houses. All that's being built as we speak. So I think New Jersey is going to go through this sea shift within the next 12 months as all that inventory comes online. Right now, young families can't afford the payments on the mortgages with high prices in New Jersey. So we are seeing that. We are seeing it's a difficult market at the entry level. But there's no inventory there, so that's the good news. It would really be a problem if we had a ton of houses and no buyers. Thank you all very much. I greatly appreciated it.
Wow, so I think we're all a little smarter.
Your Town Tube is today's #1 all-local promotion, social media and networking in the Princeton Mercer region. The most effective, attractive, quickest, and affordable ways to reach a huge local audience.